yo, yo, welcome to the show.
Yo YouTube, what is good? Welcome back to another video, Zero to Hero Investing. This one's gonna be a portfolio update on my taxable Robinhood account. If you're new here, we track two portfolios on this channel. One's my taxable and one's my Roth IRA. Both are inside Robinhood, so they might look similar, but my approach to investing are different or is different in both of them. So if you want to follow that journey, feel free to like and comment and even subscribe and you'll see my videos and you'll stay updated. So the portfolio is right now it's at $47,011.11. And in buying power, we have a bit under $100. I like to keep some in my portfolio for whatever opportunities I do see come in. Even if it's buying point 0.1 or point 0 something of a share, I am of the firm belief that everything adds up. As I say, every mickle make a muckle. If you know what that means, you know what it means. If you don't, it just means that every no matter how small something is, it comes together eventually to add significantly to the greater whole, So just stay consistent and you'll make it to where you want to be. So looking at the performance, it's Saturday, it's like 5:15 p.m. Eastern time, Saturday, September 6th. But this graph, this chart right here is reflective of September 5, so Friday's activities. You can see it was up on the day, about a third of a percent, but we fell 0.17% after hours, and that's fine. I don't even know what caused that. But the for the week, on the week chart, we are up negative 0.31%. We're down 0.31%. And for the month, we are up 0.73 of a percent. At 3 months, we are up 10.34%. Or know that you made $4,400 in the last 3 months. It's kind of hard to believe, hard to fathom, but there you go. The stock market, it goes down, it comes up, it goes down, it comes up, but eventually and consistently over time, it will go up. Year to date, we are up 13.85%, almost 14%. And right here, 1 year, we're up 17.36%, right under $7,000. So, options over here, we have two ongoing. I did just sell a call, or maybe a little bit over a week ago, maybe a week ago. I sold a call on Ford. I have about 150 something shares. So I saw an opportunity. I think it was a day, it was up 3%, almost 4%. I'm like, let me sell just underneath the current price. I sold at 1150. I sold an 1150 call when it was trading at like 1170 something, thinking that with it being just, let's say, overbought maybe, or the fact that I think September is a slower month, maybe even a redder month in the market, I can take that little bit of a cushion. And also with just time decay, I thought that selling a $50 call would net me something decent over the 1 month period. So I'm still like in grounds where I could like get my 100 shares called away, but I'm watching it. Let's just say that. And here I bought a debit spread on the SPY, thinking that, or really betting that it will be trading below 622 by expiry. My thesis is that the market goes down on during the month of September, so I do expect some pullback. So far, it hasn't been doing that. We're 6 days in. I've lost half of my equity there, but that's all right. So let's look at the stocks and ETFs I have. We have actually we're not gonna do that in this view. We're gonna come over here and do that because I think it's a little bit more easier to follow. It's easier to follow in my opinion. So this is the overall chart showing my invested amounts versus the 0.2% I have in individual cash. Barely anything. $95 is 0.2% of my portfolio. That's crazy, mind blowing. So let's sort this by equity because this is how it would have been sorted in my portfolio anyways, and see how things are. Top of the list, we have SPY. We have 13.3, almost 13.4 shares of SPY. $8,600. We're just a few hundred short of 9K invested in SPY. QQQ $5,400. We're at a little bit over 10 shares of QQQ. Average cost 504, and the returns are pretty nice on both of these, honestly. SCHD is the third largest holding. We're not super far above break even. Our average cost is 2702, and we're still trading in the 27s. So, I mean, other than the 200, almost 200 shares being pretty nice, which we can't even really capitalize on that too much because selling an SCHD call is netting like $0. Like, no one's, it's hard to sell them. Our total return is $115, and I hope that one day that will be higher than that. Most of this, I'd say, we've returned more in dividends from SCHD than we have with unrealized gains right here. Next, we have SPYG, and this one I'm looking to maybe take away from the portfolio. You can see with these four holdings, the top four, my intention is to make it roughly 50% of the portfolio. But SPYG, I've been looking and thinking and researching, and it's all, I mean, I can say this about SPY and QQQ2, but SPYG is almost negligible or redundant because all the holdings are within SPY. And I think just to have a cleaner portfolio, it would make sense to clean that up or join those, or at least use the money from SPYG to put into the other top three holdings that I see as my forever holds. I'm think one side of me is thinking that, one side of me is thinking just use that money and put into some of my individual stock picks that I really am convicted on, so that I can potential give my portfolio more of a potential to outperform the market. But I'm a little conflicted. I know QQQ is already in SPY too, so that's another theory that I'm not really gonna go down that drastically and sell QQQ and buy SPY because I do like the individual or the exposure to the like the stronger exposure to the technology sector, let's say. SCHD will it's such a unique ETF, it will always be its own thing as far as I can see. But SPYG, I'm looking to maybe sell and split into some other existing and or even new positions. There's this one company I'm looking at. I'll speak more on it in the future. But I'm looking at maybe introducing that to the portfolio. It does kind of go against my idea of wanting to slim down. But if I do see potential, I do see potential, and I will look into it. Let me know what y'all think in the comments. But next on our list we have Rocket Lab, and this one is really just such a crazy holding in my portfolio. By far, it's the highest total return position. $1,600. We have our average cost just about half, just a little bit over half of what or the stock is currently trading at. So almost 100% return with that one. My goal is to get to 100 shares of Rocket Lab. I could have done this months ago when it was trading so much lower than what it's trading at now. But I didn't. I started off with few shares and then slowly made my way to 73 and a half, which is a lot, but I can't really use it and sell options against it if it's not 100 shares. Next, we have Microsoft, 3.95 shares at the moment, and I think my last update I was at maybe 3.8, maybe 3.85 shares. All right, because I know this week I have been coming in and buying some Microsoft. Friday was a really red day for it, so it's doing well overall. I mean, it did cross above the 500 mark and went way above it, relatively way above it. But with this performance on Friday, it's trading again under 500. It had like a almost 3% drop. So 495 is where we're at. Good opportunities to buy in. I remember when 400 was the mark, like is it good to buy above, like slightly above 400, or when it's 395? And now look, a year later, a few months later, we're asking the same question, but 500 is that threshold. By all means, it could go back to 400. But, it's just crazy to see these things. Next, we've got Ford, 153 shares of Ford. 100 of this is currently collateral for the call I sold. It's currently trading at 11.73. So like I said, if it were expiring right now, I would lose these 100 shares and I would have made the $50, of course. But yeah, there we go. For it, I like holding it because it's a strong dividend payer, in my opinion. There are better ones. I won't call any names, but there are better ones. If I do lose the 100 shares, I don't know if I do see it as an opportunity or potential loss to the 100 shares, I might roll because I don't know if I want to lose them right now. I just want for it to raise their dividend, like come on. Right now we're at $112 in return. Um, Quick math, up around 6-7% in Ford at the moment, just shy of $1,800. It's a pretty big holding in the portfolio, definitely within the top half, maybe top two-thirds or top third of the portfolio. Next, we have realty income 5907 current share price, and our average cost is 58.86. This one's like dancing. It one day it's above my average cost, the next day it's like down a percent and a half and below my average cost. It's we're literally just break even at the moment, up $6, not even. But obviously a strong monthly income payer. It's a REIT. And nice to have that kind of exposure. In my Ratha area, I do have Vici, VICI. So I like having this one to kind of balance it out, and it does provide that consistent monthly dividend income. While I don't use it right now, it's nice to see it come in, and well, I do use it, but just not like for life. Next, we have Home Depot, 3.52 shares, and this one, yeah, it's doing what I think it should be doing. It's funny when I just had bought into it, it just started tanking, but now it's obviously recovered. We're up 143 in that position, and we'll continue to be up in that. Continue to add more to that. McDonald's is a similar boat as Home Depot. They're different stocks, of course, different companies, different sectors, but they're just like stalwarts in the portfolio. Good, resilient American companies will forever, knock on wood. I plan to always be buying these. Next we have Target, which I don't know if you can say I'm bag holding, but I'm down almost 300 every day. The $5 I buy does like they do come and try to bring this average cost down, but we're so deep where I mean I'm sure it changes it. But 112 average cost currently trading 93. A month ago it was teasing 10 mids, 105, maybe 106, but it fell drastically, and I think it touched 90 lows. I don't think it went to the 80s, but Target, I don't know what's going on, but we're down 300 in your position, so fix that. Next, we have Costco, 1.42 shares. Started at one whole share of this, and just those slow and steady zero point zero 0.01 of a share buys, zero point 0.1 of a share buy. I don't know if I bought zero point 0.1 of a share. That's a lot to throw in at once. But currently up 151 in Costco. Great company. Absolutely love Costco as a stock, as a company. We'll be buying more. AbbVie 6 shares. Love this. It's probably the only healthcare kind of pharmaceuticals company I have in the portfolio at the moment. So I probably should be a little bit heavier in this. I do feel comfortable having AbbVie as like the main sector carrier instead of an ETF. That's fine with me. I used to have J&J, Johnson and Johnson, but I sold out of that. And of course, when I did, it just skyrocketed. That's all right. AbbVie, no issues with it so far. General Mills, somewhat bag holding. It's the only other position that I'm in the red in, or I think there's three of them. General Mills, $5 a day. It helps with bringing this 57.67 closer to whatever this is, and I'll keep doing that. By the end of next week, I'm sure I'll be at around 24 and a half shares of General Mills with my recurring buys. Amazon is next, AMZN, almost 5 shares of that. Maybe I'll throw some of the SPYG money into Amazon to clean this, get this to a clean 5 shares. Does not pay a dividend, so I don't really get that reminder like to bump up the holdings, the position size in this. But for the time we've had Amazon, it's doing well. We're up probably 25% in that, 231 right now. Yeah. SMH, similar story like with SPYG and SPY. You could argue that maybe not all of them. I'm not sure if it has any international stocks in it, but most, let's say, of SMH's holdings would be in QQQ. But I do love having this like separate exposure to the chip making companies, so I wouldn't want to sell my SMH just based on that logic. It does perform well when technology is doing well, and we're definitely in that time era right now, so I'll continue holding on to SMH. 241 average cost, 292 current cost. We're up a pretty penny with that. 175.34. Visa is next, 2.73 shares. I'd love to get this up to 3 shares. It's kind of far, especially with it being so expensive. But we will. We will. JP Morgan Chase, 3 shares of that. I want to keep these roughly around the same. You could argue that they're similar in the finance sector, but still vastly different companies. Both I'm a huge fan of, and I am a genuine customer of Visa and JP Morgan Chase, but they are just so different. I do for sure see merit in keeping both of them individually. Next on our list, we have Main, 13 shares of Main. It always baffles me that my equity is so low because I don't know why I feel some kind of guilt buying Main whenever I do. It's probably because it pays such a good dividend and it also appreciates like super good too. I don't know. Next we have O'Reilly. Only have ever bought this on a recurring buy basis. 8.124 shares at the moment. It's trading like what, $21 above my average cost. That's insane. Up $174 in that, and hope to see that keep going higher. And our last and smallest holding of the portfolio right now is American Electric Power, and I do believe this is my only utility company right now. So maybe I want to add another one, or maybe I want to increase my share size in this. There's no reason this should be my smallest holding. If anything, I'm comfortable with O'Reilly being my smallest holding, but that's where we're at. This is how everything looks on the chart. Love to see this every week, how it changes, or every time I come in here and look at it. Might be getting rid of SPYG, might be selling some of that equity or using some of that equity in some of my smaller holdings and some of it in my larger holdings too. So with these four being around 48%, let's say it goes down to around 40%, and I'll just have a challenge of needing to bring that back up. So there we go. Possibly something to work on after making that sale. But that's the portfolio, guys. Thank you so much for watching. I will see you in the next one. And please, if you do have any comments on me like branching out and making more types of finance related videos, but more personalized, I guess, like my budget, my net worth tracking. I do my dividends already, but just stuff like that. Like, let me know. I'm probably more interested than I think I am. I don't even know what that means. Thank you guys for watching. See y'all in the next one. Peace.